As gold drifts quietly in the background, is silver starting to steal the spotlight? With bullion markets seemingly dozing off and investors shifting their gaze, we ask, has gold run out of steam, or is it just taking a breather? And what's driving silver's surprise rally? I'm Rhona O'Connell, and joining me today to break it all down is StoneX's Head of Market Analysis, EMEA and Asia, Rhona O'Connell. Welcome back, Rhona.
Thank you, Hannah. Nice to see you.
Lovely to have you with us again. So let's start with gold. Is it dozing off as silver wakes up?
I'd say it's curling up by the fire for a snooze rather than actually dozing off completely. We've talked before about the way the market moved over the course of the latter part of last year, with a lot of people wanting to get in, waiting for $200-300 drops. But in the end, the market was cleverer than they were, and eventually they had to pile in, and the momentum built. And it started to feel crowded. And if you add to that in the slightly longer term, we'd had at least 18 months where the action in the gold market was assimilating all the growing risks in the different areas that have influence. So it's had a long time to take everything on board and for the investors to position themselves accordingly. So what's happened subsequently, and if you look back over the last 2 months or so, maybe a little bit longer, the degree with which gold prices have reacted to any extraneous force, be it a long-term one or just something which shoots through the room, that's been decreasing, which sort of suggests that the market's not quite had enough, but it needs, if it's going to go higher, it needs some oomph. And for the time being, there isn't anything there because all the oomph has been in it. So it's correcting. But by the same token, there's still enough uncertainty out there going forward for however knows long to make sure that when it does come down towards the 3,300 level at the moment, maybe a little bit lower in the future, it is still catching a bid.
So then do you think that the worst is behind us then when it comes to geopolitical tensions or financial tensions?
It would be irresponsible of me to give you a bald yes to that, wouldn't it? Because we never know what's going to happen. We've had a lot, but there's trillions of us on this planet, and anything can happen given geopolitical risks. And it's not just bilateral trade tensions, it's multilateral tensions and personalities and characters and all sorts of different elements that make up that equation. So it would be, as I say, it would be irresponsible to say yes.
You know, as I said that, I was thinking, though, yesterday, Trump has again threatened to fire Powell. Now, where would that leave us if all of a sudden the Fed changes every 4 years according to whatever leader is in power at that time? And what would that do to all the other central banks?
Well, it would leave the United States financial system up a creek without a paddle, basically. The world's largest debtor. Europe is currently the world's largest creditor. The state of the US economy is still relatively robust, but from a financial standpoint, the Treasury market still needs inflows. And at the moment, where things are standing, I can't claim this for myself, I picked this up at a Bank of America breakfast this morning. The long end, as far as the Japanese are concerned, the long end of the bond market, they're pretty much fully hedged. So we've had all those flows coming from Japan for a long time, and that looks as if it's now starting to slow down a little bit. Europe's not that interested, to be perfectly frank. So if you add that additional variable, then that really doesn't speak well for the outlook for the US economy.
I see.
Because people would see it as you say, you're looking at a four-year time horizon. And the whole point about the independence of central banks is to be able to maintain steady monetary policy and to be very largely predictable. And the Fed has had this "we are listening" program for the last 2 or 3 years. They're also talking consistently about being much more transparent and making engagement with the public so that people understand what they're doing and why.
I want to shift focus now to gold's, how should I put it, more energetic sibling. How is that doing?
Silver's doing very nicely, thank you. 3 things. A couple of them short term, one of them longer term, but one of the short term elements bridges the two. The short term, as far as short-term market action is concerned, is that with gold becoming crowded, there's been some activity on the part of over-the-counter investors and some in the hedge funds and the family offices and so forth, who have potentially seen that gold has not necessarily topped out, although, as you know, I think it has. So they're not turning away from it completely, but there's been some rotation into silver and platinum as being undervalued and been waiting in the sidelines, and therefore they're taking, maybe top slicing a little bit of their gold holdings and moving into silver and platinum. Now we'll leave platinum aside because we could talk about that for half an hour, and I know you don't have half an hour.
No.
But as far as silver is concerned, that has led also to some gold-silver ratio trading, because the gold-silver ratio was above 100 for much of April, and it's now sort of crept down towards 90, and a lot of people are expecting it to go lower. But tied in with that, one of the reasons why it had been drifting while gold was moving was because 70% of silver demand is industrial. And therefore, with the Chinese economy still struggling a little bit, Europe still on eggshells, question marks are rising over the United States, and coin sales, incidentally, they're flat on their back. If anything, they've reversed, so that some bullion coins in the United States in particular are trading at a discount to spot.
Oh, wow.
So there is a move. Some people are selling coins back and selling them to the mints and getting the spot price and taking the turn accordingly.
Yeah.
But that's, to some extent, that's beside the point. But that underlines why silver has been lagging. Now you've got that little bit of extra interest which has brought it to life and brought it to centre stage again.
Yeah.
At which point we then turn to the future for the market. It's now in a structural deficit even before you think about any investment activity.
Okay.
And that is going to widen over the years as we have the onset of AI, solar cells and vehicle electrification, although of course there's no question mark over that.
Thank you, Rhona, for all your insight as always. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.